Welcome to the Dividend Talk podcast, episode 127, Investing with Mike Plezier. Hey guys, welcome back to another episode of Dividend Talk. Today we're going to chat with Mike Plezier, who's going to talk us through his journey as a dividend growth investor. We're also going to look at his portfolio live and critique it. All that and more. See you on the inside. Hey, European DJ. How are you this weekend?
Really good, Derek. I mean, have you seen the last few days in the stock market? I mean, lots of opportunities again.
We're back into a little bit of a whirlwind, aren't we? We don't know if we're up or down. We're kind of every which way at the moment, but it's interesting times. Only one more buying day for me before the end of the year, so I want to buy it on a down day. So I'm hoping Monday the market starts really low. But
And why just only one left?
because I've only one more payday, which was Friday, so I get paid Friday. Funds automatically get transferred over. That'll transfer in by Monday, and then I'll buy shares.
Cool. And what are you buying?
I don't know yet. I have some ideas. HQL, which is a CF, HPQ is up there. So I don't know. I'll make my mind up on Monday and see.
Nice one.
So today we have another guest, and it's a fellow compatriot of yours, and it's Mike. Mike, welcome to the show.
Thank you. It's an honor to be here, guys. I listen to your show like every time, so it's good to be part of your or to witness your bromance.
You get to see it live and up close.
Exactly.
So what we might do is we're going to get into your story a little bit later, but maybe just give a little brief overview now, and we'll just introduce yourself briefly, and we'll take it from there then.
Sure. Like you said, I'm Mike. I'm in my mid-40s. I'm an urban planner by trade, and I live in the Netherlands. And the listeners to your podcast might know me from Facebook, where I'm quite active in the Dividend Talk group, talking to other members of the community. And I consider myself to be like part value investor and part dividend growth investor. And I have this passion for finding these oddball, maybe off the beaten market, beaten track stocks, And besides that, I'm a big soccer fan, or football fan, of course, as we say in Europe. And I support the most talented club in the Netherlands, Ajax Amsterdam.
You should meet up with the Kleine Kapitalist, Mike, because he likes these hidden gems, and I believe he is also probably an Ajax fan. I think you would go along well together.
I'm
getting the feeling it's a Dutch thing to find these completely odd companies that nobody else knows. It's quite cool. But you mentioned football. You're a football fan, and obviously Ajax are top quality team. Who has watched the World Cup today?
I did, of course.
It was incredible. What a game, and what a way for the GOAT, as they call him, Messi, to go out on top. I think he's going to be his last. I don't think he'll play another international game after that, but it was an incredible way for him to win that today, I think.
Oh yeah, everybody's off in Argentina, I think, tomorrow.
Yeah, they'll have a national holiday. I was really, honestly, I wanted France to win. European, and not a huge fan of Argentina either. And look, Messi has enough trophies in his cabinet. I was really rooting for France, but you can't take it away from Messi. I think he deserved this probably more than anyone. And Mbappe looks like he's going to take that crown next. His display today was he did nothing for 80 minutes and then just exploded. So it was a great game of football and a great showcase for a game.
Oh yeah, true.
Okay, let's talk about what we're here for. Dividend Talk. Forget the football. What's in the news of the week? I know you had some stuff, Mike. Did you that came up?
Oh yeah. I noticed on Facebook, one of our community members, he posted this like CEO of Castellum. He resigned, and the stock went down. Can you believe it?
Yeah.
How do you feel about that, European DJ? What are your thoughts on this?
I'm just, I feel pity that I don't own Castellum anymore, right? That they proposed to cut the dividend, because for me, I still don't understand why there was no need for it from a fundamental point of view. But I still remember when we were for the first time talking about Castellum, when the CEO came in, and when I read the annual report, and I felt like, oh, this guy's full of shit of himself. Yeah, and it has proven to be. Yeah, he kind of got a margin call on his other business, had to fire sale his Castellum shares, sold it to the devil, Achilles, and here we are as retail dividend investors, right, with upcoming dividend cuts. So this guy for me is just done. I'm happy that he left. The new owners can do whatever they want with this talk. I'm out. I'm not going to look back. I'm in Cebus now, so.
Yeah. I'd say it was more of a case he was pushed out rather than walked, I would say.
Yes, of course. Kicked out, like Bud Spencer.
Yeah. But look, interesting times for them, and like you said, you got out, so keep looking forward.
Yeah.
I saw one this week with Intel. I don't know if you guys have read it, that they are delaying their German factory now. They want more money. Obviously, inflation and supply chain issues and all this. So they're looking for more money, more subsidiaries to do this. I'm not actually surprised, but it's just going to be. I don't know the German market too well, but I'm just wondering, will they cave in? Will they give them the money they want to bring them to Germany? Probably if they push in Ireland hard enough, we probably will take them. We'll probably give them the money, but it's just will Germany pay up the money to keep them building there this year or next year?
I think they'll have to, and because Germany needs to do something with their industry, and I think having a big one as Intel in there is really beneficial. And you need to give it to Pat Gelsinger. He's proven to be a great politician so far. What he did in the Ohio plant and the CHIPS Act, I mean, it's quite wise for him to see if he can get an additional few million to support his free cash flow. So it's bullish for Intel investors, I think.
I think it's good. I think he's picked the perfect time. I mean, he has kind of up against the wall a little bit here. He said, "Okay, we plan to do this. The ball is now in your court. So let's see what happens in the first half of 2023 to see if they'll get what they want."
Yeah.
Elon Musk was next up on our list. I know he's been in the news, Mike. You wanted to talk a little bit about Elon.
Yeah, sometimes he's this like brilliant guy, and sometimes I wonder, is it like a total nutcase? Probably both, because first he buys like at a crazy price. He buys this Twitter, like claiming everybody should be allowed to say whatever they want. And then as soon as some journalists in America are writing about some things he do, he kicks them off. I cannot understand that.
He's just got an ego, hasn't he? He just has a really, really big ego. But I think, look, we spoke off air. He's borderline crazy. He's obviously intelligent. He's made Tesla work. He's made SpaceX work. He's got so many talents. But I think he's just a victim of his own ego. He probably believes he can do anything and it'll work, and he'll get away with it. But I can see Twitter just dwindling away. I think someone mentioned, I don't know if it was offline, he's going to start blocking links to your other profiles on Facebook and other social media platforms. I mean, I just don't understand how that's going to work.
I think like he comes every day in the office and he says like, "This is my house, you motherfuckers. You are my users. This is my money. I don't care." Even there was also news, I think yesterday or something like that he doesn't even want to pay the bill at the moment, the rent for the office. So I don't know who's the owner, if it's Realty Income or one of the other big ones. But he probably moves it to Texas anytime soon, I guess.
And I saw Jack Dorsey he's looking at starting up an open source version of Twitter as well, which will add more competition. So that could be something. He might take. We have to make him 45 billion and then setting up a competitor and taking all the customers back instead. That's genius. If that works, that's genius.
Yeah, the issue is just for us, right? As a community, we get affected by this, right? there's not really an alternative for Twitter. Not in the form that it is. I tried this Mastodon, and it's nothing that appeals me. So of course, with the Facebook group, and Facebook is really stable, luckily, except for the VR and everything and the meta. But the group functions are working neatly. But many people have built businesses on this, right? And also companies have built businesses on the Twitter ecosystem. So and overnight, by one such single policy change, they lose their probably almost their entire business now. Maybe not a good business model, but I think it's never good when you're in an ecosystem to start treating, to start behaving like a little dictator. It will not work in the long term. He has to come to his sense.
Yeah, he will, or he'll be forced to. Eventually, the board will turn on him or something.
Yeah, or there will be no money anymore, and he bought a cat in the bag.
Yeah. And then the last item I have here is market bouncing up and down. I think Mike, you had this wrote down as well.
Oh yeah. On Wednesday I was like cheering, hey, my portfolio is up big time, everybody was happy, the whole market celebrating. Then comes Thursday, something happens that everybody expects, they're raising the interest rates 0.5%, and what happens? Bang, everything goes down. Thursday, Friday, everybody's, I don't understand this market really.
Yeah, I love it because these are buying opportunities, right? Like buying the dip.
Yeah, I agree. I mean, I don't really care, I just look at my dividends and I'm still accumulating. So, I'm probably cheering more when it goes down, to be honest, than when it's going up. It's just,
Yeah.
I'm just, people are not used to this interest rate raising, I think, and that's probably why they're reacting like this. I think it's been since the 70s, or 80s or something, that they raised interest like this. And I think you have to be like 60 years old or so to really know the market like it is evolving now.
Yeah, and anyway, the last 12, 15 years has been a Fed-driven market, right? If the Fed was, I said, hawkish, it was good, and it was more bearish than actually the way around. But you can see really the stock market kind of following every time when Jerome Powell says something. It's really following. It's like almost like an addicted person here, and we're just a bunch of junkies. But that's why I like dividend growth investing so much, because we are not there to sell. We're there to buy great businesses that continue to grow their dividends, right? So if then the prices drop, our yields go up, our yield on cost. So that's of course very attractive. So I'm always seeing this as an opportunity. I'm also hoping for some still some in the last 2 weeks for some funds to close their books and to sell some more stock that they were down on, so that on the 31st of December they can say like what a great companies we had in our portfolio. And then I hope on 1st January actually that it goes another 10-20% down straight away, just because it's a new year. That's what I'm really hoping for.
Yeah, you'll be shooting fireworks then, huh?
Oh yes.
Yeah, it's a crazy market. People talk about it being an efficient market, and look, I think it just proves that it's not. People panic. People don't know how to navigate this. We're reading a lot of things in the news. Somebody posted on Twitter, and I meant to bookmark it and go back, but they gave the scenarios of the height rate, or how much they'll increase the interest rates by, and then based on that, what way the market will go. And I meant to go back and check to see if that was right, but it's certainly an unpredictable world. Predictable in some ways. We know what's going to happen, but we just don't know what's going to happen inside the market from day to day. But I agree, dividend growth investing is the way to go. And on that note, we've had some pretty good interest, or pretty good dividend hikes over the last week as well.
Yeah, for me the one outstanding was actually Franklin Resources. So it's if you open up this dividend aristocrat sheet, right, from dripinvesting.org, it's one of those stocks that also always pops up on the screeners. Ticker symbol, I believe, BEN. Yes. And they hiked the dividend by 3.4%. So that's not a large hike, but they have done it now for 41 years already. And this is really, really impressive for me. And then I think one of the companies, Derek, that you spoke from time to time about is CVS Health. And because I think around Walgreens, right, the competitor.
They're a huge competitor of Walgreens. And for a long time they held their dividend. They didn't grow it. They were paying down lots of debt, but now they've started to grow it and grown it quite considerably, 10%, which is a great increase right off the bat. So they're a company I don't own. I did have a couple of shares and I sold them because they weren't growing their dividend. Definitely for me a better company than Walgreens. I know Dividend Wave, I think, likes these as well. So now that they've gone back to dividend growth, they are definitely worth checking out.
Yeah.
WD-40 I didn't know that was a standalone company. WD-40.
You didn't?
No, I thought I just always assumed.
They're
always
iconic
assumed
dividend grower.
I know the product obviously, but I would have thought they would have been under 3M's umbrella or something of that sort. You know?
No, you should look up their history. It's an awesome company, but always too expensive. But now it hiked its dividend by 6.4%, and I believe it will be like 2.1 or 2.2%. But believe me, if this company ever reaches my screener criteria of 2.75, I'm buying it. I mean, this company has proven to be inflation safe and even growing their price above inflation. And come on, would you ever buy how I say it, an alternative to WD-40 if you go to the building shop?
No. I think every household I've ever been inside of has had WD-40. Every household.
Exactly. Come on, it's a no-brainer for me. Now the next one then was Amgen. They hiked their dividend by 10%, and it's now yielding 3.2%. So this pharmaceutical is nicely continuing to grow. But then I think the real fireworks came from the next pharma companies, Eli Lilly, which hiked their dividend by 15.3%. Of course, it's a really low yielder of 1.2% now. But last week we had a lot of double-digit hikes. This week as well, and it's mainly so far, of course, in the American neighborhood. So I'm really looking forward for January and February and March, where we get to see the European companies doing a readout. And I'm wondering if they are going to reward us also with double-digit hikes. I truly hope some of those in our portfolios.
Yeah. Time will tell. Interesting fact: Amgen has bought out a company here where I'm from in Waterford, so they are now going to be coming. There'll be a huge factory around the corner for me. So loads of pharmaceuticals here, and they'll be joining the ranks here. So they'll be here. So I'll be able to pay a little bit more attention to them once they're here.
And then maybe get a salary increase, right? If there's more competition for an engineer.
Yeah, I mean, the company they're already taking over is already hiring lots from our area, and if my boss is listening, I need more money. No, I'm joking.
Well, at least similar to the Amgen dividend hike of 10%, right?
Yeah, exactly. Yeah. But no, it's interesting for the area. It's just something that popped up on my radar that Amgen are taking over Horizon Therapeutics here. So I'll do a little bit more digging on what that deal entails, because it'll have a direct impact on my area. So
nice.
Just a little fun fact.
Good. So then these were the dividend hikes, and maybe now it's a bit back to you, Mike. Are you ready for the rapid fire questions? So these will be 5. Good. So these will be 5 questions. You need to choose one of them, and then afterwards you can still get back to 1 or 2 and express yourself and explain your answer. Okay. So let's go then. The first one, and then it has to be this one, of course. Pepsi or Coca-Cola?
Pepsi.
Good. Next one. I will give you 1 million now, or I'll give you 50,000 euro for the remainder of your life every year.
50,000.
Messi or Mbappe?
Man. Messi.
Swiss dividend withholding tax or Norwegian dividend withholding tax?
Swiss! Give me Swiss!
Okay. Investing in cryptocurrency or investing in slot machines?
Slot machines.
Good. Would you like to clarify any of your answers?
I'm not going to go on Messi. Everybody knows why. No, I think what was the hardest one to choose? Help me out a little bit. I forgot.
Okay, so I'm curious to why you chose 50K per year annually versus 1 million now.
Feels safer. Feels much safer. It was more like, okay, you don't think you said it really how long, but I figure, if I'm
For the rest of your life.
the rest of
annually.
my life, I'm safe. Who cares? I can still invest with 50K, so I'm
Yeah.
happy. 1 million. Don't think that will be. The 50K I can invest, and I think it will be me more in the long run than the 1 billion.
Nice.
I think.
Nice.
So.
Good. So thank you, Mike. Very interesting. And maybe this is also a topic where we can jump a little bit into your journey here, Mike. And I'm honestly really curious, like, what got you into investing? Do you still remember the first time I guess you opened a brokerage account or something like that? When was it? Why? In what?
Well, I can really understand your question. It wasn't like 2011. It was not too long after the financial crisis. This was a time when everybody still hated bankers and banks. I know some people still do, by the way, but hey. And I remember there was like 0% interest, on your saving account. The government in the Netherlands decided, hey guys, 65, that's not long enough. So you can only retire at like 67, 68. So they were raising the age that you could retire, and I was like, guys, this doesn't feel safe anymore. I'm not trusting the government enough for my pension, and I just want to be able to take measures in my own hands. And when I want to quit it when I'm 60, then I want to be able to be quit at 60. So that basically led me to open my account, my brokerage account, like you said, in 2011. You guys, I did not know a thing about investing. I was raised more like, that's if you want to lose your money, just go to a casino, man.
Yeah,
Don't
exactly.
invest. It's only professionals who do that. But I just wanted to make more than 0%. So I figured, I have to take some risk. Let's just take a look. And I tried a lot of things. I did some crowdfunding. I did some what do you call it? Penny stocks. I did even some day trading, nothing on a big scale, just trying to find out, what suits me. I think I even invested in Lego, and unfortunately not the company.
The
Not
real
the
Lego
company
box.
Lego, but real Legos, like you can invest in whiskeys and,
Yeah.
But so I tried out a few things, and I quickly found out that, it's more like the Warren Buffett, style that suits me, more like value investing. So luckily, I early on chose to go that route. And actually, only like maybe a year ago or so, it was like 2021, I decided to sell out. No, it was 21. Yeah, it was 2021. I kind of liquidated my portfolio and started all over. And for me, it was like, okay, I'm not beating the market. So, what am I going to do? Am I going to stick to my old ways and lose money? Or at least not lose money, but, not beat the market? Or am I going to go with ETFs? And so that's kind of what I decided. I actually paid off my mortgage and kind of increased my my spending or my savings. How much I can save of my salary each month, and decided, I want to go slow and steady, monthly. So I kind of had my mind made up, and then I found an article about dividend investing, and I thought, let's research. And that's what it did, and it kind of led me to go that route, because I really love investing. And I'm not saying that I will never invest in ETFs. If I would be in America, I would probably be investing in ETFs. But as a European, it's kind of hard when you want to go the dividend route. So right now I'm investing in dividends. So that's kind of like how I got there. I don't know if you got any questions.
Yeah, I'm curious about selling out your portfolio. So you've been building up this portfolio over a number of years, and I know you've dipped in and out. It must have been a huge decision to sell your portfolio and start from scratch. Was there any tax implications there as well? Did you take any of that into consideration when you were doing this, or did you just say, screw it, I'm just selling it and starting from scratch? I don't care what the consequences are.
Well, I really felt like I was repeating mistakes, so I figured the only way to really stop is to do a total stop, and that's why I decided to shut down my brokerage account and stop, put the money in the bank, and I knew that I wanted to be free, like in the now. The only reason why I'm investing is, like I said, I want some financial freedom later on in life, and I figure, I can probably get a bit of that freedom right now. Let's say if I pay down the mortgage, and get my costs down, then I got a bit more freedom, like to choose the kind of work that I want to do. For example, how many days I want to work, because I don't need as much. If you don't have the costs, you don't have to earn the money too. So that's kind of what I was thinking about. It was a big step, yeah, because like I said, I love investing. So it was a big step to suddenly just say, sell everything and start over.
And was paying down the mortgage the main driver behind that?
Yeah. And like I said, the financial freedom that I'm experiencing right now, because I paid off my mortgage, I have lower costs. It gives me freedom right now.
Yeah, that's pretty cool. I mean, I know we've done an episode before, pay off the mortgage or invest, and it's always something that plays my mind. But even more so now, we've spoke about interest rates, and we know they're going up, and we know mortgage rates are now going up. And at the moment, yes, my portfolio is probably making more what I'm paying on interest and mortgage. But if we start hitting double figures, it's definitely something I think is. I think a lot of people might have similar thoughts to what you have there.
Yeah, I understand if you say, it's probably, when you take your calculator, it's probably smarter to, not pay off the mortgage, invest the money, make high returns. And but it's also important that you sleep well at night. And like I said, it gives me this feeling of freedom. And I think that's worth a lot too.
But that's funny, because that's also a bit of a Western feeling, because I'm living here 3 hours from Ukraine. And I just feel like, I'm not going to put all my money in my house. What if the war spills over? Yeah, I rather have the bank take the debt if I need to run away, and they can have my house. Yeah, so it is also really a feeling, I think, in of safety behind it, right? So I really have, even if it, I said, would be the smartest thing to do, let's say, based on a calculator, I will probably still not want to have my whole entire house paid off, because I can't do anything with it. It's just standing here. Yet it always assumes a free market going forward. And I don't have that full 100% confidence of being in Poland that this will be the case, looking at it from a Dutch perspective.
Yeah, that's an interesting take on it. Your geolocation, your location is probably fundamental in making a decision like this. I know in Ireland, I've spoke about this before, property investing is huge here. It's what most people do. Property prices seem to go up. There's a lot more demand for the houses than what we can build, which obviously prices go up. We're in a bubble similar to where it was in 2008 when it crashed, but the only difference is the banks a little bit more stable, but also there's not as many people emigrating. So now we have this huge supply huge amount of people looking to buy houses, but just not enough houses there, and it's driving prices up. So lots of people want to get on the property ladder, and if they can pay off the mortgage and maybe sit for 5 or 10 years, they'll probably make nearly close to double their money back. So Ireland to Poland is completely, I think, polar opposites in terms of owning a house or the mindset in around owning a house, I think.
Yeah, so many people do invest a lot in real estate here, right? Not so much on the stock market. Everyone has usually a second apartment or something like that somewhere in Warsaw that they rent. So that is really hot. I guess it's more like my perspective to this as a Western. But Mike, I wanted to ask you, because in the Netherlands it's also really common to work part-time. Are you already working, let's say, 36 or 32 hours? And are you considering, for instance, your passive income to compensate going to, let's say, 50% working? Is this your plan? Or would you like to go from where you are now straight away to zero at a certain moment when you're 60?
Well, actually, I'm kind of looking for a job right now.
Okay.
So that's a hard question to answer. The most important thing for me is really that it's a job that suits me, that I'm enjoying. It's quality of life right now, and I'm kind of aiming for a job that should be possible, that I can save up to 50% of what I earn. And that's kind of what I'm working, because you got to have a plan when you're investing. So my plan is really like in about 10 years, 12 years from now, I want to be totally free of, finances really being a part of choices that I make about spending my time. Because the way I look at it, time is the most precious resource that we all have, something you cannot buy, how much money you got, and you have to spend it wisely, with the people you love, doing the things you love. So, that's what financial freedom is about for me. So right now, I'm aiming for like a job that, preferably is part-time, maybe 32 hours or something like that, 4 days a week. And still gives me an option to save for retirement, really.
Nice one. Yeah, I would love to also start working less at a certain moment. Let's see how that goes. Sometimes I'm thinking like that. What if I'm at 70% coverage or something like that, right? Should I then also just stop working and try to earn the next 30% with a bit of Uber driving for one month, and then, I don't know, doing something else for 1 month? Because all these this is what it means, right, Mike? What you're saying, it's optionality in the end, right? Once this passive income starts to compensate for your real income.
Yeah. I mean, it is a little bit inspiring as well, because you've took that decision to pay off your mortgage, and that helps you live a little bit more free. And now you're saying you're in a position now where you don't have to rush into the first job. You're a little bit more relaxed. So it's probably, in hindsight, was probably a good decision in selling that and paying off your mortgage. But given that now, does that have any consequences or any bearings on your investments now? Does it put you under a little bit more pressure when you're, say, dividend investing? Do you chase higher yields, knowing, okay, maybe one day I want this to make up for income I'm not making? Does it impact any of your decision making at all?
That's a very good question, Derek. To give you an idea, I'm probably about like 10% on my way to being, where I want to be. So still got a long way to go, and I'm, like, as I said, in my mid-40s. So if I want to do it in 10, 12 years, that's a pretty short time, and I'll probably need like 5 more years of investing to reach that point. The way I look at it, I think the most important thing, and that's what I would also advise my younger self, find a job that you enjoy. If you do a job that fulfills some need that you have, that feels good, if you enjoy what you're doing, then in the most ideal situation, you don't even want to retire early. If you're like 55, 60, whatever you want to, retire, or then you probably still want to go work to work, but maybe you want to go for 3 days, or but that's how I look at it, really. So does it affect me in the way I invest right now? No. I still try to invest in growing businesses, so I'm not going for high yields, because I figure that's probably the kind of companies that I want to invest in. I don't want to change my philosophy for that. I want to go with growth, so dividend growth investing, and we'll see where it brings me in like 10 years. If I'm like at 50%, I'll probably have a cool job, and that's going to be okay. It gives me freedom for 50%. That's okay too,
Nice. And then how do your friends and family respond to your journey? Are they aware of it, first of all?
No, I don't think so.
Do you speak at all with people about investing around you? And
No, actually, you guys are like the first people that I like really talk to about investing. Most people are looking at me like, are you crazy? Investing. I don't have the money to invest, or that's way too risky. I'm not going to invest, or they find it plain boring. So yeah, that's usually the response that I get. I was not raised to like know things about investing. And I got some little things that's cool, but in the Netherlands, I think it's quite common that people invest in their houses. It's like, okay, if you got a house and if you got some money on your saving accounts, you're doing pretty well. But the idea of investing, well, at least in my little bubble, no, nobody's interested at all.
Being from the Netherlands, I so much relate to what you say, and it's usually also considered for something for the rich people, so it's also bad, at that moment in time. But I really was inspired when we had Ian Loppeck on the show, said like it feels a bit like cheating the system, and that's how I really also feel. That really resonated so much with me.
Oh yeah. That's true. It's but what the thing about it is, I truly enjoy it. It gave me another way to look at the world around me. Whenever I now buy a toothbrush or a toothpaste or whatever, I turn it around and I look like, okay, what company is making this? Can I maybe get some dividends from it so I can cover my toothpaste, buying? Or it's kind of like it gives me like I said, a sort of lens to look through, and you learn a lot from it as well.
So what have been your biggest learnings?
My biggest learnings. Okay. Okay, so like on a personal level, learning more about myself. I think it's common that you feel the losses way more than you feel like what you're gaining. If you're buying a stock and it goes up, you're like, hey, cool, whatever. At least that's how I am. And if I buy it and the next day it's down 15%, the first thing I think, I gotta buy more. I gotta double down. This great company is now selling for 15% less. It's a discount. Let's go for it. I learned by now that it's probably not the best response, and I kind of forbid myself nowadays to do that. It's not like a bad principle, but too often have I been catching that falling knife, and I've been kind of finding a way to like now average up, because I find that's probably more lucrative in the long run.
Buying into strength,
yeah.
It is hard to do though. I mean, I see a lot of similarities in some of our trades. We've tried a lot of the same things, and probably fail. It's probably a similar impulsive nature there.
Yeah.
And sometimes I feel the same, but averaging up, I always find I'm always anchored at a price, and I find it really hard. So I try and ignore the price, if that makes sense, as much as possible. So I don't get anchored on a price, because as soon as I have a price in my head, boom, that's it. I still have Microsoft at 180 and that's where I'm anchored, and you can't talk me out of it otherwise. It's just
but I need to anchor, but what I do is I recalculate. So if you recalculate, I hopefully at least that's the thing is, I like buying things. I'm a bit of a collector. That's what I learned about myself. I like buying new companies, and before you know it, you have like 50, 100 companies. Impossible to like manage your portfolio. So I'm trying to stick to a certain number of stocks, preferably something like 40, maybe 50. And the reason why I'm doing that is because otherwise I just keep buying. And like you said, I recognize this. I have this anchor, and I want like you said, Microsoft, I bought it at 225. When it's now at 230, I'm like, hey, that's more expensive. I'm not going to buy it more expensive. I'm not, I'm just going to wait till it drops to 200. I think that's natural. But the way I try to avoid it is to regularly recalculate the value of the company. And I think in about a year, it would be crazy if the same price would be on the stock. So if it goes up and the company's done well, then I can pay more for it. Then I got a new anchor.
Yeah, we got a question actually about this not too long ago, and we were not able to address it on the show before. And there was a question on the Facebook group like, Look, why are you always, how is it, looking at the share price of things, right? Are you really a dividend growth investor? Why don't you just buy companies that meet your criteria and that can have a growing dividend and just accumulate them? Why are you even doing fair value assessments? So Mike, how do you look at this? Because you mentioned you're also combined a bit as a value investor, right? Because that would probably prevent averaging up, how you say it, paralysis.
Oh yeah, no, well, kind of like I just said, I need the calculations to be able to buy up and to forget about that I bought it at less, or I really need that. And like I said, I want to limit the number of stocks that I have. So what I use the prices for really, like if you would look at my portfolio right now, it has about 34 stocks, which I think is quite a lot if you think that I've only invested for or build up in like a year. So it took me a year to accumulate that. And if you look at it, it's really a product of this year. It has some tech stocks in there. I probably wouldn't have bought it in 2019 because I think they were too expensive back then. Right now, I'm buying Microsoft at 225 because I think, hey, this is a nice entry point. So that's kind of why I value. I'm trying to buy what's cheap now and then adjust my portfolio as I go.
Talking about your portfolio, you shared with us your portfolio, so maybe this is actually a really good moment to do a little bit of a live portfolio review. You suggested that to us, right? Because we often have questions, so I find this really brilliant. So maybe, Mike, can you share us a little bit about the background of your portfolio before Derek and I will roast it?
It shouldn't be too hard, guys, Well, as I said, it's about 34 stocks. It has actually like 3 stocks in there that are not paying dividends. Not surprisingly, those are like in the tech corner of things. Things like Amazon, Alphabet, and Verisign, I think. But I thought those were like interesting enough to keep and to keep in my portfolio for the long run. Go for price appreciation, and who knows, maybe one day they'll pay a dividend, but I'm not counting on it. And the other stocks are kind of like a product of me finding them on one hand undervalued, so they're like at my fair price or below my fair price, and usually they have a good dividend growth. I'm checking for more things, but that's kind of the 2 things, like the chowder rate. I want it to be around 12 preferably, and I want it to be below my fair price. And then what you get is, well, the portfolio that you see right in front of you. And it's not done. I'm still aiming for like a better, how do you say that? I want to hit all the sectors. I don't want one sector to be like 30% and the other 5%. So I'm still, as I add stocks or if I buy more, I'm trying to get that more like equal among sectors. So that's kind of like the introduction to my portfolio.
Nice. So maybe for the listeners, let's go to your top 10. Your first one is ticker symbol Rabo. So those are the Rabobank certificates.
Yeah.
That's a Dutch bank, full disclosure. Then the second one is ticker symbol HPQ, HP Inc., right? The one for the printers and the laptops. The third one is ticker symbol MSFT. I don't think it needs an introduction. The fourth one is ticker symbol ASML, same company name. The fifth one is ticker symbol HLN, Helion PLC. I believe it's a spin-off from GSK, if I'm correct.
Yeah, that's correct.
Yeah. Then we have ticker symbol VNA, Vonovia, where I think you're a bit in the red. Then the next one is ticker symbol ATD, Alimentation Couche-Tard from Canada.
Yeah.
I think our dividend guy really loves this one, I remember.
Yep.
Then we have ALV with Allianz, and TJT Target, and then BAE Systems. I believe that is the one that is probably sending a lot of equipment to Ukraine at the moment.
Oh, yeah.
So what do you think, Derek, when you look at the portfolio?
So I'd like to know a little bit more about Rabobank. I'm not Dutch. I don't know anything about this company, and it's your top company by far. It's nearly 7% of your portfolio. It doesn't look like it has a growing dividend from what I can see. So just a little bit about them. What makes them your top position here?
Well, it's actually under review, but that being said, actually it's not a stock. It's certificates, so it's more like a bond. But it's I think it's like they call it perpetual, so it's a perpetual bond, which kind of gives it the feeling of a stock, but it doesn't increase in price, it doesn't go down in price, it just hands you 6.5% each month. I bought it for a bit less, so it's giving me like on cost, I think it's like almost 7%. It gives me like the steady income of 6.5-7% each year. I said month, but I mean year, of course. So yeah, that's the story behind it. I'm not happy about the fact that it doesn't have any upside potential, like in value, or not too much at least. So yeah, I'm kind of thinking of maybe I should switch half of it for example, something like ASR, the insurance company in the Netherlands, which also pays 6%, but at least you got a company that's hopefully growing their dividends, and so that's why I said it's under review.
I think ASR just announced a 10% dividend hike to €2.70 because they bought Aegon. And then they are expecting, I think, mid to high single-digit growth for the next 2-3 years. So, you might actually do better by replacing it with ASR at this moment in time. Yeah.
But I have to say, it's not a bad strategy having something like that as your number one position. I mean, you have steady income. You know what's coming in. You can rely on it. Okay, we're in a market now where we don't know what we can and can't rely on. So I actually don't think it's a bad idea having that as number one. Looking at your portfolio, I tell you what I was disappointed about. You said earlier that you like to find these companies nobody's ever heard of, and I'm looking down through your portfolio, and I've heard of nearly all of them until I get to the end. You do have some companies from Slovenia, which I've never heard of, Poland as well, and Denmark. So you are quite diverse.
Mm-hmm.
You have Zotis there as well, ticker ZTS. I love them. I really love that low yield, but I think it's a great company. So diversification wise, I don't think it's too bad. You are very, very heavy in financials and information technology. I'd be concerned about that going with the market the way it is at the moment. I would definitely look to bring up those consumer staples and healthcare a little bit more than what they are. I know it's a work in construction and all that, but that's where my main focus would be. But there is a lot of solid companies. You have a mix between. You do have some good companies like Microsoft. So you have growth, high dividend growth. I don't see a lot of dividend aristocrats in your top 5 or 10.
That was my main feedback as well. I'm missing a little bit the flavor of American dividend aristocrats, let's say it like that.
Yeah.
But I mean, you do have companies like Dividend Guy says this a lot better, but Alimentation, Couche-Tard, I think they are a really good company as well. So I think it's a great foundation. You've only been doing this dividend investing for just over a year. I think it's a pretty impressive portfolio for that. And I generally think that having Rabobank as your top position and a steady income, I think that's pretty good strategy in the short term. Is that a defined time? Is that like a 10-year or 5-year, or can you come in and out on that?
Do you mean how long the bond is?
Yeah,
it's perpetual, so
so forever.
That's forever. They can cancel it. I think it's not like probably not as secure. It's like how do you say that? It's achtergesteld in Dutch.
So it's not having the first claim when the company will go bankrupt.
Yeah. So that's Dutch on talking, but so basically you're at risk. It's not like as safe as a real bond would be.
Yeah.
So and they can cancel the payments officially. Then they'll be in a lot of trouble because investors will be very angry. They did it actually not so long ago. So during the financial
crisis.
Yeah, it's I have to be honest. It's I consider it to be pretty safe, but you have to read into it to be. And the other thing, thank you for the feedback, by the way. I love your feedback. One of the things I've been considering is I found ETFs. Okay, I found it very hard to find ETFs that are covering like the dividends. I don't have to explain to you guys. You know what the problems are. But what I do find is ETFs that cover the consumer staples very well. If I look at their top 10, I'm like, hey, there's the companies that I would invest in, like single companies. So I'm actually thinking of maybe simplifying things and just say, I'm going to add like 10%, 20%, whatever of this ETF, not even bother buying too many other consumer staples and just focus on the other sectors. What do you think about that?
I think that would be a good idea. The issue is always like with the ETFs, what yield does it give? What is the expense ratio? It's UCITS, so usually expense ratios are higher than the American equivalent. The second thing, will those be growing dividends? And that's usually the biggest issue with what we face here in Europe. So I do think it's a good idea to have a certain core in ETFs, but then I would also adjust your strategy on that and probably don't expect growing dividends out of it and just say like, okay, this is going to give me kind of a floor in dividends. Because how I look at it is when you're at early retirement, you need to be able to count on those dividends. Yeah, and an ETF, that's really difficult. So I think it's for you to estimate what's your floor in the dividends. Do you feel okay with that? But based on that, you could say then I have that as my stable site, as my core, and I hustle more on the stock picking on the information technology stocks or something like that. But what I actually wanted to recommend you from that point of view is like try to figure out what your top 10 stocks are like you just would love to own. Like what would your anchor of your portfolio, let's say 5 years from now, because you're still in the accumulation phase, right? This is a lot of a result of what has been attractive over the last year. Yeah, but what is really your target in this case? And for instance, would you love to own Johnson & Johnson as one of your core positions? Yeah, so these kinds of questions I would ask myself if I were you. And then make sure you have them really on your radar. Do your analysis now with your buy prices, as you say, as a value-minded investor as well. And once they come, hit them and already put your buy orders out as well, so that you get to collect them. And because you have Texas Instruments in there, that's for me clearly nowadays a top 10 stock that I want to accumulate more.
Yeah. The short response to that. Totally understand it. And I kind of thought about like picking like my top 10, but then again, I'm like, okay, let's say this happens. Okay, I'm picking my top 10 and it's fairly valued right now.
Yeah.
What if it never gets around this fair value price? Then I'm getting into conflict with my value investor side of me. Do you understand? It's like, let's say I want to buy Albert Heijn.
Yeah.
Ahold. And it drops to a price that I'm like, hey, I'm comfortable with it. I want to buy it right now. And then for some reason, the next 10 years, it doesn't come down to a fair value again. Then I'm kind of breaking my own rules. So that's why it's hard for me to say like, hey, I'm going to pick this company, Ahold, and I'm going to accumulate no matter what.
Yeah. So no, I'm having this example with Nike. Yeah, I'm having already Nike for 4 years on my list, and I still don't own a position in it. Yeah, but the moment it gets there, I can tell you, it will be my elephant gun, and I shoot it and hook it into my portfolio. So it's more like that I've made up my mind of what are really those exclusive companies that I would love to build my portfolio on. And there are companies that you won't see for 5-6 years, I think, just because of the valuation, the quality behind it. And if it's too low of a yield, it doesn't make sense to wait 10 years to come to a 2% yield or something like that if you want to retire already about that time. So it's difficult, but never ever, nobody told us that investing is easy. So
no, it's a challenge. It's a nice challenge too.
I have one question, because I'm looking at your portfolio and you've kindly given us the price and fair value price and the percentage. and I'm looking at nearly, say, 2/3 of your portfolio is fair price or undervalued in the round.
Mhm.
How do you make a decision on what you're going to buy next?
Like right now, like how
Yeah.
am I going to proceed from here?
Yeah.
Well, I kind of already said that I want to look at the sectors, so I'm probably going to try and find companies in certain sectors that I, going to research, going to do a fair value analysis on, and then I'm going to put them on the watch list and I'm going to add. So that's basically what I have in mind. Working that way, I enjoy valuing all these companies, and so that's kind of like the way to go, I think.
Yeah. I mean, I felt like I got stuck down. That's why I asked you. I felt like I got stuck down that rabbit hole where I was trying to match up my sectors all the time. Trying to be diversified, trying to be the correct weight across everything, and then I just realized, what's the point? I mean, buy what's on sale. I mean, all the sectors will
Okay.
come around at some point. It doesn't have to be right now.
Yeah.
So I took the focus off the sectors and more the focus on what company was on sale. But it was just interesting to hear because you got quite a few there that are on sale according to your fair value. So it would be quite hard to narrow down who you're going to buy. But that's a fair.
The way I look at it, if like for example, right now HPQ, if you look at it, I think it's way below fair value. I like the stock a lot. The only reason I'm not buying it right now is because it's already at a point in my portfolio that I'm like, I probably don't want to increase too much. But on the other hand, it is a very, very interesting stock for me to look at. And I've been at a point that I'm like wanted to click, do the buy offer, but it's so hard, And I agree. I don't think the sectors should be like a religion, 10% in each or 20% in each. It's probably on the long run, like you said, every sector will probably be on sale at one point. So, get the elephant gun when you need it.
Good. So Mike, maybe just one more question before we go to our listeners' questions. And what are the, let's say, 2-3 stocks that you haven't got in your portfolio yet, but you just would love to own?
There's so many. I would love to own some French luxury. I'm thinking about LVMH, Dior, L'Oreal. These things. Like Munger, I read the article lately, and I have to really smile. He said, the world is driven by envy. If there's some stocks that are driven by envy, it's these things. I wouldn't buy any of the stock of the stuff that they're selling, probably, myself, because it's way too expensive. But hey, if you want to, impress people, you probably have to buy it. And so, I love those. I also like Wolters Kluwer. It's one of those stocks that's like, stellar, but never gets cheap.
I would love to have that one as well.
So Visa is probably one of the stocks. I like Moody's, S&P Global, Siemens, Costco. So, I could probably go on for a bit, but
Siemens you could buy now. Come on.
Yeah, well, I'm price anchored, guys. I'm price anchored. I have to admit I'm price anchored, and to be honest, I did not do a very good value of calculation for them. I was more like a technical analyst. I was like 95. Should be possible to buy.
Check it one more time. Check one more time, Siemens.
I will do a calculation. I promise you guys will do a fair value calculation, and if it's on sale, I'll get it. If it's
nice one,
fair value, let's see.
So I do have one last question, and then we'll get on to listeners' questions. We've obviously given you feedback on your portfolio, so I'll put the shoe on the other foot. If you were to recommend one thing that myself or EDGI should consider doing differently, what would it be?
Just one thing.
It can be two. It can be two or
just one thing that I think you guys love a good story. Everybody loves a good story, Everybody loves a good story, and one of those good stories is usually a turnaround. Watch out with the turnarounds, guys. Come on, that's kind of like that's why in the 10 years that I've been investing, I was lacking the market, because every time I was thinking I'm smarter than the market. This company, it's going to turn around, and it never did. And that's where you bleed the cash. So it's you've got to have fun too. So that's probably what I would say. Like limit the number of turnarounds.
Yeah, I think we came to the conclusion already in the last few episodes, talking to each other, like, oh, it's again a turnaround. Yeah, that's also a result of the market, right? What we were talking about, because over the last few years, maybe not during COVID itself, those 2-3 months, but stocks has always been expensive. So if you have certain yield as an entry criteria, yeah, usually you get into the bucket of some broken companies that you're looking at, and I think Intel is really a classic example of it. Another one would be, if the market would be not crashed yet, would be, for instance, 3M at the moment. Yeah, it would also be a turnaround as such. So,
Yeah.
but luckily I didn't. I learned from that already a little bit, Mike. But it's a really
Yeah,
good
no,
reminder, because
sold
maybe I
Philips.
wanted to buy Intel this week.
You sold Philips. I was very proud of you. And
Yeah. I had to
Yeah,
get rid of that one.
us Dutch are proud of Philips. It's such a legacy company, but come on, they've been messing up. And at one point you have to just say, I'm gonna sell. So you did the right thing. Yeah.
Thanks.
Cool. Good advice. I like EGI, I'm trying to take that on board. I think since we started doing this segment on the dividend increases, it's hitting me even more, because none of these companies with the big increases are turnaround plays. None of them. And then you look at my portfolio, you have shit like Walgreens sitting there. I'm just like, oh man, here we go. But I take a point, Tim.
Yeah.
Cool. We move on to some listeners' questions. And Phil has asked us our first question. If you had the chance to ask Warren Buffett a question, what would you ask him?
I would probably ask him to be my mentor. Please, 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 please. Just spend like 1 hour a month with me. And I'll promise after a year, I'll do the same for 2-3 people. I'll pay on, and they can do the same. We'll spread the love. Please, Warren, if you listen to me, if you hear this, I'm ready.
We'll send him the link by post, but so let's make it a short link so that he can click it, and on a Nokia still can listen to it.
I'd print off my portfolio, something similar to what you've given us, and just ask him to critique it, so he could probably tell me that 20 of my 22 companies are shit. Just to hear him say that. Hobby investor, it would be so cool if you could make a list of Dutch compounders, which I guessed. Maybe a list of some of the top Dutch companies out there.
I can name a few. Let me see. I already named a few, of course, but I think Wolters Kluwer is probably on high on the list, or their like brother Relics. I would probably look at insurance companies like ASR and N. I like both. ASML. I mean, who doesn't like a company that's like ruling the world? They're like the only company that can do what they do. So DSM, probably in English, and Ahold, of course. Gotta love Ahold.
Yeah, and Shell is not anymore a Dutch company, but you don't really have oil in your portfolio.
No.
Is there a reason for it?
Yep. There's like 2 sectors that I'm not comfortable investing in. I'm not saying it's not something people should do, but I do like utilities that are focused on renewables. But I don't really like companies that I'm like, okay, in 20, 30 years, are they still around? Maybe they are turnaround by then, maybe not. So I'm kind of avoiding that. I just want to have the feeling, at least, that the company could be around for 30 years later on. So that's why I'm not investing with oil. And in the biotech sector, I'm also not equipped to really understand what they're doing. I'm afraid of heights. I hate cliffs, and patent cliffs are very scary to me. So that's why I don't invest in them. I do like the devices, medical devices. So I'm probably going to look at one of those to add to my portfolio.
Yeah, nice one. Cool. So what are your favorite investing books then?
Oh, my favorite, you guys got kids, right? I'll hold it up for you guys. Maybe you can read it. I'm not sure. It's Joel Greenblatt.
Oh, the little book that beats the market.
Oh,
yes.
If you can read it, if you're listening to the podcast and you've got a kid that might be interested in or you want to entice about investing, this is a great book to read together. It's simple, it's short, it gets the point across, I think. So that's probably my number one because of that reason. I also like Outsiders by Mr. Thorndike. I don't know if you guys know it, but this book
I've
really
not read it.
you should really. It's about people that are like outliers. They run their company to great heights, and basically it stretches the points of having a good CEO, and not like the great leader, but the great capital allocation guy. Somebody who knows how to, get the capital where it's gonna earn the investor the most money. But this is really a point. Gets the point across. So
nice.
That's probably my two favorites. I could go on, but
nice one.
More?
Nice one.
More? Last one, Mr. Lynch. You probably Meeting the Street. This book, I think he wrote more like Peter Lynch, but I think the he makes it like feel like anybody can be a investor. It's if you want to get enthusiastic about it and really look at the world in a different way. Everybody can be a specialist in a certain area. If you're a doctor, you probably know a lot about medicine and stuff. So, hey, you could, face those patent cliffs, which I can't. So everybody's got knowledge that will help them in the stock market.
Yeah. Nice one.
Cool. Simon has asked us, I like this question as well. What companies that are not publicly traded would you like to own?
Yeah, for me it would be Lego and Mars. I mean, I especially Mars. I'm always surprised that it's not public.
Yeah, it's a great company. Yeah,
I like Stripe. Have it heard of Stripe? I like Stripe mainly because they're Irish owned. But
the payment processor, you mean?
Yeah, the digital payments processor.
Oh yeah,
I would love to own them.
I can imagine. I went for I'm not sure if you got them in Ireland, but I think they do. They are in Poland. Action. It's a discount chain.
Yeah.
And they've been growing like crazy. The only problem is that they have private equity, like this British private equity. So it won't ever be cheap, guys.
They just opened up one nearby here, and you can see again. It's all the time busy there, and it's all the time a certain let's say range in society that you find there as well, including myself. Good stuff.
Yeah.
If you want to retire early and work on your savings rate, go to Action.
Nice. Marek has two questions. The first one is, what people inspire you the most in investing?
I think it's usually the regular unknown guy that you don't know. Sometimes you hear these stories. There's this famous story about this guy in America working at the gas station who left 7 million when he passed away. Of course, he should have used it on booze and hookers by the end of his life. But this is for me. Those silent people are for me the heroes, really, like everyday Joe.
Yeah, I know there's two guys that I won't mention their names because I speak to them on email, but they are both retired from investing. One from dividend investing and one from other forms of investing. But I'm always inspired by these because they show me it can be done, and the type of lifestyle that they're living. One of them is traveling all the time, one not so much, and they're completely different. But it's just inspiring to see. Okay, this does work. It can work. You just need to stick with it. So they're the people that inspire me. People like Warren Buffett, of course, they're inspiring, but they seem like unachievable. See, I mean that seems like I'm never going to have billions and billions of dollars. But my goal is to be able to, like what you're saying, Mike, have a little bit more freedom in my time, in my work, and be able to live the life that I want. So that's who would inspire me the most.
Yeah, you know what? With Warren Buffett, of course, I said already, he's a big example for me as well. But the thing is, he never really gave what's his magic sauce. He's advising everybody. He's like this great mentor to a lot of people, but does he really tell how he's doing things? Did he ever really try? I don't know. Can't really talk bad about Warren. Love you, Warren. Contact me. You know me. But at least teach me. But to be honest, the people that I admire is also It sounds bad, but people like you, people that are making podcasts, that are making videos, that are spreading the love for investing, really. They're not all the same, not all good, but, it's good to spread the love for investing. Gets people going.
Yeah, at least not the American guys like what this guy Meet Kevin or something like that. Those are in my in my shit bucket. But like Sven Carlin, right, who was mentioned, is really awesome guy, and he had to be from Europe because of his directness as well. So yeah, nice one. And Ian Logbook,
Of course.
Yeah.
Part 2 of the question: what investment Christmas gift would you like to get? This can be anything. Change of CEO, dividend hike, whatever you want.
Oof.
I would say 50% decrease in price of both Texas Instruments and Microsoft. I would love that.
Without
for
changing fundamentals.
Without changing fundamentals. Yeah, just for
Yeah,
one
yeah.
day, 50% decrease that I can buy what I want, and then it gets
Yeah.
back to normal.
I know one.
Right.
I think we'll all be very happy if that happens. If the EU decides to harmonize tax
Yes.
dividend,
Oh,
and
yeah,
it makes
yeah,
it
yeah.
easier for everybody to just claim it back.
Yeah.
You not even have to claim it back; it will be automatic.
Yeah.
And we all have the same tax rate, all like 15% tax
Yeah.
rate. None of this 28 and all this. EDGI, you're not getting out of this question.
No, what can I answer to this? I mean, we can better stop the whole show now, and that's it. That's just it, Mike. Yeah, that's it.
You sure you don't want to share for L'Oreal or?
No. This harmonization of tax can buy me 2 shares of L'Oreal. I can tell you.
Anders has asked us, if you invest 1,000 each month in dividends, would it be better to focus on 3 to 5 of the same stock, or would you buy new stocks each month?
I think it depends a bit on how much it costs you to invest in the stocks. If, for example, I'm with the Giro, so if I would invest, for example, in an American stock, I think it costs like €1 or so. So even with small amounts, you can still invest in 5 stocks. If it's for me, I'm personally, I say okay, I want it to cost at least or at most 1% of what I'm investing in. So let's say if it costs €5, I could invest up to €500. It's kind of like how I look at it. So yeah.
Yeah, because the cost is also one-off, right? And then never you look back. Yeah, I have the same. I'm now at this stage that I would just invest the whole €1,000 at $1,000 at the same time in one stock. But I'm already a bit ahead of the journey, so I've got already dividends coming in and such that I would also, include in that money.
Yeah. When you're new, I think it's sometimes easier to invest in 3 to 5 companies instead of the one, because you might not have the same conviction as that, and you're new in the journey, and sometimes it's nice to spread the pie. So I would probably go that one. I wouldn't even worry about if they're the same or if they're new. Just whatever you think suits your profile, suits your strategy, and looks to be value. That's what I would look at.
Good one.
Anders has asked the question: how do you look at investing into Norwegian companies given the new taxes?
Okay, I got one Norwegian company. You guys were very kind not to mention it. It's Orkla. I'm going to sell it. I'm going to tell you first. I'm going to sell Orkla just because of this reason, and because I'm not really, they're not really cheap right now, according to my calculations. So I'm like, why am I going to pay 40%? Come on, 40% of my dividends. Come on, 35 is already painful, but 40, it's crazy. Come on, I'm getting out.
Yeah.
40%. That's just too much. It's just too much money to be paying on tax.
Yeah.
Up from 25. Okay, it was 25, and now it's 40.
Yeah. So we had also a question from Michał Kaczmerak, and he asked about tax loss harvesting. He said he started investing in April this year, and he had several positions in the red. He has no capital gains this year, but since he's a Polish tax resident, he could carry on this loss for the next year. So, Michał, if you don't have any capital gains, then why even sell for tax loss harvesting? I would do it next year. So I'm this year tax loss harvesting because I have some option income. So with that, I sold my GE shares that I still had this last bucket. So I finally get rid of my trauma. Was my last bunch, and with that I prevent paying capital gains tax. So I can't do it for dividend income, unfortunately. I wish this was also included there. Yeah, but if you have now no capital gains, then why bother? Just keep the shares, right? Maybe they get back into the green again, and such as well. You don't know where you will be next year. So.
Yep. John has asked the question, and I think we've kind of answered this throughout the show, but he's got a mental block and he can't bring himself to add to his winners when the capital gains are so high. He always looks for losers and wants to average down. How do we get him out of this mental block?
Sometimes you just, for instance, what helps, take the share price column out of your portfolio. Yeah, and just make a really simple rule, like all the stocks in your portfolio that you want to have, just for instance, in G Sheet, use colors like if it's above your entry threshold in yield, put it on green. If it is below your fair value, if you apply that, or whether you say below a 20 PE, put it on green. Yeah. If it I don't know, if it has been a certain how is it payout ratio, below a payout ratio, put it on green. If those 3 boxes apply, just buy it. Yeah. Sometimes it should be just that simple, and then you're not looking at the price anymore. Prevent price at all cost almost. And if you go to my portfolio template, for instance, that I have, my dividend tracker via my blog, I think there's only on the dividend portfolio sheet, there's one small column that says the share price. But you really need to look for it, because on all the other sheets you won't find it, and that's exactly for that reason.
Nice. I think, Mike, you said earlier, recalculating as well your position and what your fair value. That might help if you're stuck and need to know the price. Maybe that will help. But as I said, I tend to get price anchored, so don't take my advice, please.
I think we all have it, but I've been trying over the last 2 years to get better into it. I'm still not satisfied, but I've been averaging up lately more often.
Yeah, same here.
Yeah.
Cool. Andre Alexandros, sorry, has asked the question. A lot of European companies pay dividends once a year, as we know, and it's now soon time to announce annual reports and dividends. Out of the group in your portfolio, what is the company you're most excited about, and which one are you most worried about?
Yeah. So, of course, the one that I have the highest expectations from is Ahold. I would like to see Danone doing a dividend hike again. That would be nice if they at least hike it back to before the cut. Shell, but I think Shell isn't up for a dividend hike because it's a quarterly payer. Allianz, I have some high expectations from at the moment. And Munich Re is really the silent workhorse on the background. So yeah, those would be the companies for me.
Yeah, Unilever will be interesting this year as well to see.
Oh yeah,
to see what's going on there. In terms of the worst ones, I'm expecting Fresenius to have a horrible year. I still own a few shares to them, and I think I sold Vonovia. I can't remember, but Vonovia as well. I don't think they're going to look too promising.
Yeah.
Well, for me, it's what I look forward to is Helium, because they're a new company. They will be paying dividends. That's been announced. The question is how much. So I'm very looking forward. I'm expecting about 1.8, 1.9, maybe 2%. So let's see if that happens. And Vonovia is my. Did you see what happened to the house prices in Sweden? I think it was like a minus 13% or something like that.
Mm-hmm.
That happens in Germany, and they have to sell their assets. I'm not looking forward to that.
Who will be the buyer? That's the one you need. That company you need, the buyer.
Yeah.
Okay, Tim has asked us, what do we think about Pfizer as a company? Also, their low dividend increases over the past few years.
I see it. It feels a little bit like such a one-day fly musician, right? COVID walked in and they got filthy rich. They did really great with allocating the cash, but other than that, I'm not so optimistic about their business. There are better pharma companies.
Yeah. I mean, I don't think they were doing okay before COVID. COVID helped them. And you're right, they did really well with the money. They are paying down debt, increasing dividends, and the whole lot. So going forward, I just don't know. I don't know. The impact from COVID is not there. That revenue stream is not there. I know they have this pill now. I don't know how much of revenue that will be. So
Yeah.
I'm not really sure. I wasn't crazy on them before COVID. During COVID,
Exactly.
I was kicking during COVID, I was kicking myself. I didn't buy them before it all kicked off. I mean, we spoke about it on the show and we never did it. And then after COVID, I'm probably in the same position I was before it. So it's a pass for me at the moment. And question from Morris. I'll ask this to you, Mike. As the year draws to a close, what goals have you reached in 2022 and what goals you have for 2023?
Okay. Ooh, that's a tough one. The goals that I achieved, I think, let's just name one. What I'm most proud of really is the fact that I've really learned now to value companies. I mean, I can still improve a lot. I know that, but at least I know what a fair value price is, and I feel good about it. I feel comfortable that I'm fine with that. Before I would use like shortcuts like ratios, and I would listen to advice of others. So I can advise everybody, get your shit together, make sure you know how the accounting works and how you can value a company. It makes life so much better. And that's my accomplishment, my biggest for this year. And next year, I hope that I can find out more about options and how to use those to enhance my my returns. But I'm not sure that's gonna happen.
Good.
Yeah, we always say watch out with that one, specifically in the beginning.
We'll refrain from answering that question. I think we'll have a show on this maybe next week or the week after as the year closes. So we'll have more details on that. I will say I echo what ED Joy said about be careful. I think we're quite similar. We've had a similar journey in terms of what we tried, and option trading is certainly one that looks like a golden ticket, and you're going to be stuck with companies like Wish and Solo Electric in your company for 2 years. So just be careful. It's not as easy as everyone makes out. It's not a golden ticket. Sometimes dividend investing would actually beat it in the long run. So if you're doing it, do a lot of research before jumping in.
Yeah, thank you for that. I know.
Cool. Hey, that's the end of the show, Mike. Thanks a million for coming on. It's been a pleasure having you. And as I said, your story is inspiring. I love having people on the show and hearing different perspectives. Seeing your portfolio, actually doing a live portfolio review was quite cool. So thanks a million for joining us today.
Thank you for having me. It was an honor, guys.
Okay, and for our listeners, we will probably have one more show before Christmas, I hope, and we will see you all soon.